afternoon. We will pay attention to the debtors age analysis now. If we look at the information, they say that the account must be settled within 60 days and that the credit limit is 3,000. It is very important that they must ensure that the debtors pay within 60 days to prevent cash flow problems, because the business will budget on the 60 days to have enough money to pay their creditors. Now, can only buy for 3,000. This credit limit is determined as a percentage of the total amount that you earn a month. So they look at all the different places where you owe money and you're not allowed to pay more than a certain amount per month. So they're not allowed to sell more than that. Okay, if we look at this information, the opening balance was on February the 1st. So that means we started with 2,000. Then on the 3rd of February, we sold goods, and when we sell goods, we issue an invoice. It's very important that you must write down the name of your invoice, so whether it's an invoice, a credit note, or a receipt, or bank statement, and that you must indicate in which journal this was recorded. So that was in the debtors journal. And a debtor is an asset that increases on the debit side and decreases on the credit side. So when goods are sold, we will show it on the debit side. When they pay, we will indicate that it will decrease on the credit side. And if they return goods, you will credit the account to decrease the amount. Okay, so we sold here for 2,600. And now the balance increased to 4,600. On the 12th, there's a receipt, number 41, and that will be in the cash receipts journal. When they pay, the account is credited to decrease the account with 1,000, and the balance will now be 3,600. On the 18th, goods were returned, so we issued a credit note, number 26. This will be in the debtors allowances journal, and we have to decrease the account on the credit side, and the balance will decrease to 3,300. On March the 4th, we issued a receipt, so it means we received money from him again, and it will be recorded in the cash receipts journal, decrease his account on the credit side, and the outstanding balance decreases to 2,300. On the 13th, we sold goods again. We recorded in the debtors journal, the amount will increase with 900, so he will now owe 3,200 rand. Okay, then on April the 4th, we issued a receipt, number 59, cash receipts journal. His account will decrease on the credit side, and this balance will now change to 2,200. On April the 8th, he returned goods, so we will issue a credit note. We recorded in the debtors allowances journal. We decrease his account with 400, and the balance is now 1,800. On the 17th of April, we will issue an invoice for goods sold. It increases his balance with 700, and he now owes 2,500. On May the 3rd, he pays again. Then we issue receipt number 77. In the cash receipts journal, his account will decrease with 1,000 rand, and he owes 1,500. And on May the 16th, we issue an invoice for sales again, and we record it in the debtors journal. His account will increase on the debit side, and he will owe 2,300. So when you do the debtors ledger, it is very important to write the name of the source document, invoice, receipt, or credit note, so that you can search for those if there's any inquiries later about the account, to see what was the number of your source document, that it will be quickly to find it to solve any problems in the future. Now for this, we are going to do debtors age analysis. Okay, so it means that our current month is May, because they give us the closing balance is in May. So the previous month was 30 days. April, March is 60 days, 90 days is February, January was 120 days. Okay, so if we look at the first entry there, the 2,000, that was a balance at the beginning of February. So it means we already sold those goods before February, so we will indicate that it was sold before February, so the 2,000 will go under January. Then we sell goods in February for 2,600. A receipt, when we receive money, will always be deducted from the oldest outstanding amount, so it means that that payment will decrease the debt for January. A credit note is always decreased from your last sales, so this 300 was returned from the goods that we sold, the 2,600. Then in March we receive 1,000 rand again, so it must pay for the oldest debt again, 1,000, and now January is paid off and there's no money outstanding for January. Then on the 13th of March we sell goods again. There's a receipt for 1,000, so it means that must go from the oldest debt, so we will subtract it from February. Then the credit note will be deducted from the last sales, that was in March, and we issue in April an invoice for 700 rand. Then there's a receipt for 1,000, so that 1,000 must go to the oldest sales again, and the debt for February will decrease with 1,000. Then on the 16th of May we sell goods for 800 rand. Now if we look at our age analysis, here a payment was made in total of 2,300, so there's still 300 left over that's owed for more than 90 days, 500 outstanding for more than 60 days, 700 for 30 days, 800 for the current month. And if you look at this, if I add this together, it gives me an outstanding amount of 2,300 that must correspond with that outstanding amount in your debtors ledger. So when you do the age analysis, it is very important that you must remember that when there's a payment, you will first settle your oldest debt, and if there's returns, you will take it from the latest sale. So the last sales, we assume that the goods are returned from them. Okay, now what's very important here is that the internal auditor must look at the credit limit of 3,000, and he must look at the 60 days. Now if we look at the 60 days, This amount is outstanding for more than 390 days. That one is outstanding for more than 60 days. So it means they don't follow up on debtors that don't pay their account in time. If we look at the age analysis, it means he's not allowed to owe more than 3,000. If we look in February, 3,300, March 3,200. So it means that in the majority of cases, this person owes more than the 3,000. So they have to look at this and determine why is goods sold at a higher price. So according to the bank law in South Africa, you are not allowed to sell more to a debtor than they can afford. And that amount that they can afford is determined as a percentage of their salary.